Hello and welcome back to the Blockchain.com podcast. My name is Garrick Heilman. I'm the head of research at Blockchain.com and a visiting fellow at the London School of Economics. I'm joined again by Blockchain.com co-founder and vice chairman Nick Carey. As part of our Crypto Basics miniseries, today we're unpacking the term DeFi, which stands for Decentralized Finance. While there's some overlap between DeFi and Web3, another topic we recently covered, you can think of DeFi as an area of crypto that is nested beneath the broader idea of Web3. And so we're going to dig into that today. Nick, welcome back to the podcast.
Thank you, Garrick. I'm excited to talk about this. I think one of the most confusing items in all of crypto is all these new terms that we all have to kind of wrap our hands around. And so I was wanting to maybe get you to define a different term first, which is, if we talk about DeFi a little bit more in the presentation, why don't we talk about centralized finance to start with? What does that mean? And how can we sort of really, I would say, articulate the difference between centralized finance and decentralized finance? First, by sort of talking about the prior.
Yep. Yeah, no, and it's a great point you make, Nick, about the jargon in crypto, especially for people who are new. This goes back to, the beginnings of Bitcoin and how to describe it. Is it an alternative currency, a digital currency, a cryptocurrency, a crypto asset, a virtual currency? All these different terms to describe the same thing. No wonder people are so confused, rightfully so. So that's what we're trying to do here with these series is help people understand the jargon and what these terms mean. And I think that's a great place to start. Centralized finance or traditional finance, sometimes shortened to TradFi these days, even more jargon. What is that? Well, what we mean by traditional finance is I think the financial system that most people are familiar with, where you have an institution, a bank, or some kind of middleman that kind of stands between you and facilitates transactions. So if you want to send a payment to someone using a traditional bank, there's an institution, an intermediary is the term we use to describe kind of that entity, the bank, that sits between you and the party that you're trying to pay, and they facilitate that payment. And one of the things that's revolutionary about cryptocurrency is the ability to, in essence, remove that intermediary, remove that bank or institution, and have peer-to-peer transactions. And so we're familiar, I think, with this kind of peer-to-peer concept. We see platforms like Airbnb, of course, facilitating peer-to-peer, apartment rents and Uber connecting drivers with people who want to ride. But this is a pretty still, I think, new concept. This idea that, boy, you could do a lot of economic activity in a really peer-to-peer fashion without a middleman kind of taking a cut or needing to trust a middleman. And that's what we mean by traditional finance and centralized finance. And so that leads us to DeFi and decentralized finance, and this idea that through software, through blockchain technology, people who want to transact with each other can do so without any institution, bank, government, company really standing between the two. And it's a really amazing, powerful way to reduce cost potentially, reduce the need for trust in centralized institutions who haven't always behaved well. They sometimes blow up, as we saw in the 2008 financial crisis, leading to loss of funds, or they behave badly. We've seen trusted intermediaries sometimes do things unbeknownst to their customers. Famous examples of this, of course, Bernie Madoff, MF Global, and others. So DeFi really is a revolution in that sense, trying to connect economic agents more directly with each other and cutting out middleman, reducing cost, and increasing trust minimization in the system.
I like that. So yeah, basically decentralized finance helps eliminate intermediaries and allow individuals, merchants, and economic actors to basically conduct peer-to-peer electronic payments and more, and deliver all these services over the internet. So one way to think about it is essentially these applications are software that are wrapping the planet in capabilities that make it possible for anyone, regardless of the circumstances of their birth, to be able to do things like send, receive, secure, trade, exchange, lend, and more using wallets and software directly from their mobile devices. So basically, if you have connectivity to the internet, you can access an entire new financial system that is broadly available anywhere that there's a cell phone connection.
Yeah, but I think you hit on a really important point there that I just want to emphasize this idea that you don't have to apply or be pre-approved to access DeFi. There's a billion people or more around the world today who don't even have identity, like an identity document, which you would need to go into a bank and open up an account. So you're talking about a billion plus people who are in essence cut off from financial services, unable to use traditional banks because they can't even get through the application process. What's incredibly powerful about cryptocurrency and DeFi is this idea that all you need is an internet connection and a computing device, and you can access financial services. There's no pre-approval. There's no gatekeeper. Someone who can tell you no, sorry, we're not going to allow you to transact or be a part of the crypto financial system. That's I think an incredibly important feature in many parts of the world that, frankly, in advanced economies are often overlooked. When people ask what is the purpose of crypto, where bank accounts are relatively pretty common. I don't think people always think about that. But even in countries like the United States, I mean, there's a very high percentage of people who don't have a bank account. I think it's been estimated as high as 7% of the population. So a very significant portion of people in the largest economy in the world are also cut off from traditional financial services for various reasons. And DeFi certainly can help many of those folks as well.
I think that's probably one of the most exciting promises of the cryptocurrency industry and DeFi in general, which is basically broadening access to financial services by lowering the barriers to entry and providing an equal playing field for everyone that does participate. Just this week in London, I attended an event that was hosted by some members and former members of the British Armed Services that are putting packages together to go to Ukraine to help individuals train in trauma delivery. And they are very pro crypto right now because it's the only way they can get payments into and out of that area to support these extraordinarily important humanitarian efforts. And so that's a really good example of a real world application where having a financial system delivered over the internet, delivered over Starlink, is able to immediately deliver impact in a time and place that's extraordinarily needing it. So yeah, I'd love to dig in a little bit more. Let's talk a little bit about maybe some of the protocols and money market applications so we can get into some specifics. So maybe you can talk to us a little bit about Compound or Aave, which are two pretty interesting applications of decentralized finance that have emerged over the past couple of years and have delivered on pretty strong traction in a lot of ways. Let's dig into those.
Yeah, that's a great place to start. So Compound and Aave are typically described as money market protocols, and basically they are smart contracts that live on top of the Ethereum blockchain. So these are kind of applications that run on. If you want to think of, and this is a kind of a crude way of thinking about it, you can think of Ethereum as kind of an operating system or kind of a base layer. We talk about it as a layer one. There's things that are built on top of Ethereum, and Aave and Compound are two such applications in the DeFi space that have proven incredibly popular and attracted a lot of use. So what are people using protocols like Compound and Aave for? Well, what they enable is for you, a crypto asset owner, to actually put your crypto to work in some ways by depositing them into the Compound and Aave protocols and seeing real-time growth in the value of your crypto assets. You can basically, in essence, lend out your crypto to people who want to use it. And in some ways, you are becoming the bank in a way when you do this. You're deciding to put your savings to work. And oftentimes throughout the life of Compound and Aave, we've seen very attractive rates that people can generate by putting their crypto to work in such a way. US dollar pegged stablecoins, for example, have often been able to generate double-digit annual returns. Right now that's not the case as crypto markets are depressed. The rates are quite a bit lower, but that's quite attractive when you compare that to what you can get in a traditional bank. At the same time, you can also borrow from these protocols, and so if you deposit collateral, say you're hodling your ETH or you're hodling your wrapped Bitcoin, you don't want to sell that, but you do want to say borrow US dollar stablecoins to maybe put that to work in some other way, you can do that. So you can, in essence, deposit your ETH or wrap Bitcoin or other crypto assets into Aave and Compound, and then borrow a certain percentage of that value against your collateral. So this is all automated and done without individuals in the middle of it. And that's pretty incredible. There's no person making a credit decision or saying no, or having to push a button to make any of this happen. It all is automated and secured with these smart contracts running atop Ethereum. And that's incredible. You in essence are just basically taking something that traditionally you needed a bank and lots of people and a lot of manual interaction to happen, borrowing and lending, allocations, and just completely automating that. And that has huge implications for how efficient our financial system could be. You can in some ways think of our financial system as kind of almost a tax on the economy. The smaller it is, in some ways, the better. It's taking less of a bite out of real productivity. So there's a huge, I think, potential benefit to economic growth, productivity, and our overall wealth if we can move more activity to automated protocols like Compound and Aave.
Yeah, it's important to understand that the business model of traditional finance is essentially a gigantic rent-seeking system, and DeFi is working to essentially create software rules for all the people that in a traditional financial system are checking each other's work and verifying all of these contracts, agreements, and everything else. And now with technology, we're able to do many of those things at incredible scale and automate it all over the internet. There's another really exciting application, in my opinion, of DeFi, which is decentralized exchanges. And for the first 10 years in cryptocurrency, if you wanted to get hold of some crypto, you either needed to go to a brokerage or go to a centralized exchange where they would onboard you. They might take some time. You had to centrally custody your funds and then trade. And you may or may not have gotten a good deal on the price there, depending on arbitrage and liquidity at that venue. So there are now entirely decentralized exchanges. An example of that is the Uniswap protocol, which doesn't require any formal application to use at all. This is a piece of software running in an autonomous way on the internet that enables individuals to frictionlessly exchange value. And I think that is a very pioneering and interesting concept, and it'll be really cool to see how projects like Uniswap continue to deliver core services really to the cryptocurrency industry. Do you have any other things you're excited about, Garrick? Maybe like insurance markets or something like that?
Yeah, definitely. And I think you hit on a really important point with decentralized exchanges around the ability of people to not have to trust an intermediary or a human to not run off with their money. And your funds in a decentralized exchange are secured with cryptography, blockchain, technology, and are not accessible by an individual. And I think a good example we mentioned earlier, MF Global, run by John Corzine, the former head of Goldman Sachs, U.S. Senator Governor, unbeknownst to MF Global's customers, took customer funds and speculated on European sovereign debt, and it didn't go well, kind of blew up. And that kind of, those kinds of shenanigans can't really happen in a decentralized exchange where an individual can just make a power move like that, unbeknownst to their customers. It's happening on the blockchain, so it's fully visible, and you're just not having to need to trust people in the same way. And this has huge, I think, benefits in many parts of the world where we don't have the same institutional rule of law and protections as you have sometimes in advanced economies where there's lower levels of societal trust. It could really be a game changer for facilitating more economic activity, and kind of help bridge that trust gap we see in many parts of the world. You mentioned insurance. We just recorded a podcast with Nexus Mutual, which is a crypto native insurance protocol that allows individuals who are using smart contract protocols like Compound and Aave and Uniswap to actually take out insurance to guard against any kind of hack or exploit of those smart contracts. And it raises this question of, well, what is not DeFi. There's so many things in the crypto space that is, very much, focused on financial services still. It's interesting to kind of think about where are the lines around DeFi. We've talked about, Ethereum a lot. Is Bitcoin DeFi? Arguably, I would say yes. But there are things that are non-monetary in nature that maybe fall outside the scope of DeFi. Maybe something like Filecoin, a decentralized file storage platform, wouldn't necessarily be something that you would put in the bucket of DeFi. And I think generally speaking, when we talk about DeFi, we're talking about these money market protocols, DEXs that live on top of Ethereum and other smart contract platforms.
Got it. Okay. I think that's helpful. So just in summary, basically, why would someone want to use DeFi? Well, it might be a more accessible, always on, automated, in some ways more affordable way to access what would traditionally have been financial services you would get from a centralized entity. So whether that's lending or access to capital or more, those are some of the kind of key use cases. And I think one of the most important things to remember, as we mentioned already, is that there are a billion people or more in the world that have been completely excluded from the financial services sector. And now, if they have a smartphone, they can actually start to participate in the economy powered by the internet. And I think that's extremely interesting. So we've talked about some of the benefits. Let's get to the other side of the coin. What are some of the concerns around DeFi? We talk about trust minimization, but we have seen some pretty big compromises of smart contracts in the past. What are some things consumers and people looking at this should be aware of?
Yep. So I think that's a good place to start. This is new technology, and it is unfortunate that there have been quite a few exploits, bugs, hacks that have led to loss of funds in the DeFi space over the last few years, and we're talking about billions in value. And I think that's really, really important for people who are thinking about accessing DeFi to know that this is still somewhat experimental in many ways. It's true that protocols like Compound have been, running for I think 3+ years now, and to my knowledge have not had a loss of funds. In the case of Compound, there was an issue with the governance token, I think, being basically drained to some degree, but it wasn't a loss of customer funds issue. So even top protocols like Compound, though, have had some issues. Is I think an important point to make here, and really highlights, I think, why something like Nexus Mutual, like we were talking about earlier, could be very interesting for many folks looking at this space. That's one thing to keep in mind. The other thing is that this is such a radically transformative and disruptive technology that it certainly is raising a lot of regulatory questions. Financial services is one of the most heavily regulated parts of the economy, and the idea of not having a door to knock on, there's no person to call up, for a law enforcement official or regulator to call up if they have a question about something, because it's just software living on the internet. Is really blows the minds of regulators, and is raising a lot of difficult questions around, well, how should this be regulated, and who should be accountable if something goes wrong, and so on. So there is some regulatory uncertainty around DeFi. Having said that, I think many regulators do recognize the incredibly innovative nature of DeFi, and don't necessarily want to see this all squashed if this is the future of finance, the future financial system being built here. It's probably going to evolve and change in the years to come as we think about the best way to balance the trade-offs and benefits of DeFi with some of the changes and risks that are proposed. But those are two kind of big issues I think people need to be aware about, that this is experimental. Loss of funds does happen in the DeFi space, and the regulatory picture is still evolving.
I think the most interesting aspect of the regulatory picture will be that it's beneficial to countries to have vibrant economies that are pro-innovation and facilitate the faster and increasing velocity of money transacting. And so if you can build an economy that, one, attracts great talent, but also enables individuals to create wealth and exchange that wealth at a higher speed and flip that money over more quickly, you have faster economic velocity. That economic velocity tends to get taxed more, but also that increases the wealth of everybody that lives in that society. So building a more accessible, faster financial system is in the interest of regulators as well. And DeFi in many ways is at the cutting edge of delivering on that effort. So I guess we're coming to the conclusion of our time today. Is it possible that, maybe 5-10 years from now, decentralized finance could completely replace all our financial plumbing? What would that kind of look like? And if we were to peer into the crystal ball, what would you sort of envision the future powered by decentralized finance to look like?
Yeah, it's hard for me to see DeFi completely taking over the entire financial system in the next 5 to 10 years. Its financial system's huge, heavily regulated, and many people, particularly those maybe who are a little less tech savvy, less financially literate, are still going to want to rely on companies to access an interface with something like DeFi, which has a pretty steep learning curve. The user experience around DeFi is not as easy as many people would like it to be. Still today, I mean, if you look at a compound, one of the most popular protocols we've been talking about, I mean, there's only 3,000 roughly addresses currently borrowing, USD coin, one of the most popular US dollar peg stablecoins in the world. That's a pretty small group of people who are accessing the borrowing capability on one of the leading, money market protocols. So I don't think we're going to see this take over the whole financial system anytime soon. But I do think it's incredibly compelling. It's open 24/7. It's faster. It offers arguably a better user experience in some ways in terms of the speed and even something as simple as just going on to Compound and seeing your balance grow in real time is incredibly interactive. You don't have to wait for a month to see your interest accrue. It can happen very quick and instantaneously. That's all very compelling and is part of the reason we've seen DeFi grow so quickly. And we talked earlier about, I just want to come back to this be your own bank concept. Again, think of the financial services system as a tax, a middleman kind of eating into the productive work of the economy. And, we want to shrink that in many ways as much as we can, and also put all of us ideally in the position of getting more of the pie, so to speak, by providing capital to the financial system. Being your own bank and using DeFi to do that is a great way to, I think, spread the wealth of financial services more broadly.
Yeah, and I think have some ownership over the outcome. And that's one of the most exciting things. So if you're new to all of this, it's definitely a good idea to set up a blockchain.com wallet. You can acquire some comp, you can acquire some Aave, and you can actually use Wallet Connect to directly interact with those protocols. We'd welcome feedback on how we can improve all these things. We know we have work to do, but we also welcome ways we can make it better for all of our customers. So thanks to everyone for joining us. Please stay tuned for more Crypto Basic episodes to support you on your crypto journey. If you're enjoying the show, please hit that subscribe button, leave us a review, and share it with your friends and family. Thanks again.
Thank you for listening, and we hope you enjoyed the episode. And if you're enjoying our podcast, please rate us and leave a review, as it really helps boost our visibility to more listeners. Also, if you have a topic you'd like to see us cover, please get in touch at the following email address: podcast@blockchain.com. Once again, that's podcast@blockchain.com.